Hello, this is the chart profit video, just approaching 2 hours into the trading day, Friday 23rd of March. Looking here at the E-mini S&P in the pre-open. This level here is 2760. A couple of bearish developments a few days ago. We saw a rejected probe above that important value area high. So pre-open on Monday, the probe above 2760, the 4-month value area high, has failed. Also said that 2757.50, which is the minor point of control, is worth monitoring at the start of this week. Price relative to this level could provide an indication short-term strength and weakness. That's this level here, and as you can see, this being Monday, Tuesday, Wednesday, these three value areas printed below that level, so in the short term relatively weak price location. Then on Tuesday, an important development down here, the 7-month point of control just migrated to 27.25. That's here. As I wrote pre-open Wednesday, as we know, the migration of an important point of control will often occur just before a new directional move begins. So it is now important to monitor price relative to that level. Significant selling, red marked below that point of control, would be an indication of further weakness. So let's look at what happened subsequent to that migration. E-mini attempted to spend some time above it here, but closed the session below it. There was a decline overnight, and Thursday's value area was printed below that level, quite sharply below it. And that significant selling, red, that I mentioned on Wednesday is here. So right now we have an important point of control that's migrated, that often precedes a directional move. We've seen time below it, and then what looks like the start of a directional move that would certainly be lower. So we should be cautious here. That price action makes me anticipate further weakness. There is a possible development that may be worth watching for. Previously, that migrated point of control was here at 26.86. If the E-mini manages to print some time back up at that level, the point of control could migrate back down to that point. If that happened and we subsequently saw time being spent above that level, it would put the E-mini back in a stronger position. But currently these are all ifs, so I'm looking and expecting further weakness as we speak. Or rather, as I speak. You haven't said anything yet. And as you can see here on the pulse chart, which has weakened the expectation of lower prices, would fit with the weaker pulse chart that we're looking at here, and the breadth turned negative over here on the pulse chart, has not turned back positive. Price momentum declined, has actually just turned negative yesterday, and of course we've got this aggressive selling that we've just talked about, the red marking here below the point of control. That's not a bullish looking chart. Also made a point of featuring the sentiment here. Just over the last few days we've been looking at the way the RIDEX assets ratio is behaving recently. I've said that a higher ratio on a notable down day is not usually an encouraging pattern. Let's have a look at that. As we know, as the market hit its high, we saw the ratio, that's the ratio between bullish assets and bearish assets, hit a ridiculous level above 23. We then saw the market decline, as we know, pretty sharply, and the ratio came off quickly as well to hit a 4-month low over here in February at this point. But as the spider up here just tested the previous little minor high and then just declined for a few days, it's on this bit here that the ratio actually hit a 30-day high. Now that looks to be the retail here buying the dip, as we became accustomed to over the last good few months. As we know, yesterday the market fell and the ratio fell quite sharply here, and the ratio has not really fallen that much. It's still above 20. It makes me suspect and worry that the retail trader has learned a lesson to buy the dips, and at some point that's going to stop working for them. And there's a lot of late money here. Just witness, this ratio accelerating up to 23 at this point, and we're still only around 20 here. In the public Bulls percent was slightly lower this week, 33.2, down from 36.8. Bears percent was higher, 28.5 from 21.3. Bulls minus bears, the net has fallen. It's currently at 4.7. That's the black line here. It's always worth watching when the 4-week moving average of that net reaches a peak position, which it did here, back close to the market high. That was 11 weeks ago. The net reached 44.2. That's the single red line right up here. That was the highest since April 2004. So this 4-week moving average will often peak as the market actually peaks, reaches its high or close to it, but it's quite common from that point that the 4-week moving average will actually fall below zero before the market declines too much, and that may be the pattern that's playing out now as that falling moving average heads towards the zero line. If we look in the Investors Intelligence poll, the newsletter writers, Bulls percent was actually higher this week, 54.9, up from 48.6. Okay, true that the Bulls percent was higher, but let's give you the right information. I had the wrong date on that. Chart is correct. Bulls percent was higher at 55.5, and the Bears percent was slightly higher as well, 16.8%. And if we look here at the black line, the 4-week moving average of the net, this point here, lowest reading in well over a year, and as I've said in a couple of recent videos. So again, a concern is it would be quite normal to see this level broken at some point following this peak here, and that hasn't happened yet. Worry is it might require lower prices to turn this pole more bearish and actually see that happen. Okay, let's just review some of the important charts. This is the Russell 2000 ETF IWM. You can see here that the 10-month has actually migrated up to 153.54 in here. Currently printing below that level in a weaker price location. There is support here around 151.50, which is the halfway point. Again, we're seeing the migration of a point of control and price action now below that level. In last week's video we talked about the fact that the DAX, the German DAX index, found resistance at its 3-month here, and the index remained in a weak position below that level at the end of last week. We've obviously seen a decline, quite severe decline this week. And at the end of this week we've just about seen a test of this level, this low. And we've been talking about the relative underperformance of the European indices relative to the US for quite a while now. Looking here at the UK FTSE 100 large cap index, built on 18-month controlling price in here, fell below it at that point, weak price location, and we have major support down here at 68.20. The price action this week closing really weak below Wednesday's low, or Monday to Wednesday's range low. You have to look at this level and expect it to be tested. What the bulls really don't want to see is price printed below that major. In the bonds here, the ETF TLT, got a major here at 119. Bonds actually printing above that level. And for me, price above this level here, 121. If we saw higher low above that point, that would confirm some strength. There is very little between this point of control here in terms of time at 119 and 121. As you can see on the chart, it's often in the area of these major levels, these major controlling prices, that price falling into those levels or rallying into them, you see a slowing of the trend and a possible turn. So price above 121 or a higher low in the chart, oscillator low could be an indication of strength. Frankly, I don't want to make any assumptions about strength in this chart until that happens. This is USO, the oil ETF. The major is down here at 1141, so we're in a long-term strong price location above that level. And the 4-month, as we know, migrated last week to this point here, 1230, and we are printing above that level. A strong short-term price location, and it looks as though we're going to test the recent high. Just showing a graphic here from the disaggregated commitments of traders data at the top here. We're looking at managed money net positions. This is a trend following group. You want to be following this group with the trend. Point is, you do that until net positions reach an extreme, historic extreme position where there is often a reversal. You can see those marked on the chart, and currently in this rally we've seen the net position reached or very close to an extreme. Now the point is, I'm actually charting here the net position, bulls minus bears, long, short, but as a percentage of the total open interest. It's quite common to just chart the net positions without that adjustment, and if we did that, we'd actually see more of an extreme. So there is currently quite an extreme position long in oil from the trend followers, the speculators. It's GLD, the gold ETF. We know the 4 month migrated recently to 125.23, and we're popping higher at the end of this week above that level. Gold in a strong price location here. Looking here at the dollar index at the end of this week, printing below the 5 month at 89.88. Price has been attractive for 3 or 4 weeks now. Higher low above that level would be the first sign of strength. If we look here at the Euro FX chart, this is how the chart looked last week, last Friday, with the 3 month at 124.09. that had migrated higher with this price action here, but actually this minor controlling price has migrated back lower with this price action, and that puts the chart back in a strong position again. And while the chart tries to work out where that minor controlling price actually is, I'm sure the chartists are trying to decide whether this is a topping pattern or a continuation triangle. I tend to look at it like, where are we relative to the minor controlling price at that particular moment in time, and currently it's strong position. And this week the pound has worked its way back above its 5 month at 139.65, and at the end of the week here looks quite likely to close in that strong price location. So like everybody else, we're looking for potential turn situations for the dollar. Right now I'm not seeing much evidence. Final look at the E-mini S&P June contract. Here's 27.25. E-mini's been a bit lower today. Need to be cautious of this. Okay, that concludes, and I thank you for watching.